because sometimes I need to do this as well. Like if you just trade purely price action with no Asia, guys, it still makes sense to you. Look, we've had this major inducement here, major inducement here. Okay, after that major inducement, this is our mitigation zone. Why do we know this is our mitigation zone? Also, we've also induced all of these lows. All of these lows have been induced. Boom. So this in itself, after we've had the major inducement and the mitigation, why did we have such a big move? 3, 4 days of bullish price action. So price has done what it wanted to do. As you can see, look, we've had this build up right here. We've had this build up right here. We've had this inducement. Boom. All right, cool. Maybe in this instant, this was our break of structure. Lower high, lower low, lower high, lower low. All right, cool. Let's say we missed this one. I'm sure there was something internal here. In fact, you know what? If you go into the 15-minute, that is probably an internal break of structure. And that turns into a smart money trap because we just had an inducement low. Let's now turn on our Asia session. In fact, no, that's not my Asia session. If we now turn on our Asia session, things become a bit more clearer. Look, medium inducement. Boom, we've had our relevant break of structure. So Asia just needs to mitigate this and cut. So sometimes, guys, like if you lot are stuck with what's happening in the day and you lot don't know how, like you lot are just a bit confused, just go on to the 15-minute or just go on to the hourly and just see what's going on and just try read price action, see what price action is telling you. Where have we had the largest inducements? All right, cool. We had a massive inducement high of all of this. After we induced high of all of that, we had a little bit of a sell-off, and then Asia continuing on from this major inducement that we had, inducing all of this low and probably something to the left, if I'm correct. Let's see if we can find something to the left. Boom, we've induced all of them highs as well. So if we induce all of this and we've induced all of this and we've filled in this fair value gap, in fact, we might have even mitigated the order block. Okay, we filled in the fair value gap. We should look for internal structure to tell us, are you ready to sell down? And how are we going to know this? Simple lower time frame combinations. Relevant break of structure, mitigation, and push down. And then what do we have today? All right, cool. Today might have not been the clearest on the hourly, but like I said, I just want to point out, if you guys are ever lost with what's going on inside here, just this little bit, because guys, this is a day. Just go on to the hourly. And this is something I've been starting to do myself again. And that's really helped me. Go on to the hourly and just see what the higher time frame is saying. Because if you can get your higher time frame inducements and everything like that in check, then you should have a breeze. Because look, for example, on this day, we've had this inducement of this trend line. And this on an intraday perspective would be a medium inducement. We've had an inducement of that. And then this is still same day thing. So we should ideally trade until our next medium inducement, which was here. So if you positioned yourself correctly for today and stayed away from this London trade, and if you look caught a New York trade from New York, let's just say you could have caught something. Let's say you had like a 5 pip stop loss. Maybe that's a bit silly, but actually, is that an Asia session? All right, cool. Let's just say what we caught something like this. Let's just say this is 4 pips. You could have traded until here or until the next high. All right, cool. Let's say in that specific day, it did a thing. It just volume started to die off. Or if you held the trade, you could have traded until here just to be sure. But cool. Anyway, that's a little bit of the higher time frame. Just kind of just saying to yourself, if you ever get lost, just go onto the higher time frame and just have a little look at it. And just sometimes you can even just hide your drawings and just say, all right, cool. Look, what do we have here? Boom, we had this major inducement here because it's on the hourly time frame. Boom. Have we had our break of structure? Yes, we've had our break of structure. Where's our next mitigation point? Imbalances right here. Boom. We've had another break of structure, another mitigation. All right, cool. Maybe today it kept taking people out, but I'm sure you lot would have partialed out somewhere around here anyway. Take some partials. And guys, not every single day is going to give you a massive drop. But the days it does, you're good to go. But that's what I'm saying. Partial out or partial somewhere, like I like to say, or if you want to take full volume, somewhere I like to take full volume is Asia lows, Asia highs, or the next high, or the next low. If you want to be safe and take them trades as full volume. If you're going to trade them trades, you don't need to partial. Personally, just go break even and go full volume. But cool, anyway, let's get on to today. And let me jump onto my EU chart. And actually, you know what? I forgot to... let me screenshot these. We've got couple people here as well. Guy, I just want to give a quick shout out. I don't know if they're here, yeah. But there's I screenshotted them on my phone today. Shout out to Ty. I don't know if he's listening. I'm gonna at him on the chat. I'm gonna say Ty. Trying to give a quick shout out to him. I love this chart markup today, and I want to give a quick shout out to I don't know which Josh is here. I don't think it was full port Josh, but it was this Josh. I remember him from his thing. Shout out to these. Shout out to them too, because they had a great markup. But I was just looking at the analysis tab, and their markups were very solid. I liked it a lot, and it was pretty accurate. In fact, Ty today, I just want to give a shout out to Ty. I jumped onto the charts in the morning, and he actually kind of gave me my correct bias for today. So today was a little bit for tight end for GU, which I didn't take on GU, but I took it on EU. But for GU, I really liked his markup because it's something like usually I miss myself or I can miss myself. But because we're all starting to trade quite similar, sometimes I do take into considerations other people's charts as well. But like I said, guys, in my previous call, always stick to your own analysis. I didn't just look at his charts and say, all right, cool, I'm gonna buy. I actually went and said to myself, all right, cool, let me confirm if I'm thinking the same thing. So I went down, I said, all right, cool, this is my build up, this is my inducement low, it's my relevant break of structure. So I said, all right, cool, you know what, it's making sense. This is something I'll be interested in because it's fitting my plan. I'm having my build up, I'm having my inducement low, I'm having my break of structures. So if I'm saying this is my inducement low, this is my break of structure, this supply zone should turn into a smart money trap. That's what it should be. And if it's not that, I'm wrong. It's okay. We accept the loss and we move on. But cool. Anyway, let me go on to GU and let's jump onto the GU charts. And guys, this I'm gonna jump onto later. So we're gonna see. Cool. Let me just move this smart money trap. Well, this all itself was a smart money trap anyway, all of this, but cool, let's just leave it like that. So cool. Anyway, we woke up in the morning, guys. What did we see? We saw let me go on to the 5 minute because that's what I trade mainly. We saw this build up of Asia. It's nice. And guys, these are some of the cleanest days for me. We saw this build up of Asia. I said, all right, cool. We've got a nice build up of Asia now. Oh, on top of build up of Asia, we had this medium inducement, which I initially did not see and I saw after. So we had this medium inducement of these equal lows that Asia took out. So currently, until we reach our next medium inducement point, this is the one that's running the show. This medium inducement, and in fact, it's quite a good medium inducement because we've got one tap, two tap, three tap. I don't know if we go into the 15 minute, are we going to see anything else? Any other lows? Nope, just for that time being, that is the amount of lows it's got taken out. So we know that this is a decent chunk of liquidity because the low, I don't know, was this low of previous day? This was low of previous week and low of previous day. As you can see, the numbers are the same. So this is a strong medium inducement. Even though it happened in Asia, it's still strong because it took out previous day low, and on top of that, it took out previous week low. So we have a strong amount of liquidity from there. So cool. And as you can see, guys, look, we took out the original inducement here and we've tapped into the extreme now. And now we're going to be having a push up if we are going to continue bearish. But we should at least have a push up until we get to around here or we fill in some sort of imbalances. And if price wants to continue bearish, then it should do from somewhere here. Or if we re-induce this and everything. But anyway, that's a topic for another day. So cool, let's go back onto this and let's go here. So cool. We had this medium inducement that thanks to Ty, I'm gonna give him another shout out that I missed. But I did wake up and I see that we built this trend line. One tap, two tap, three tap, four tap. We've built this trend line. I said to myself, all right, cool. Now let me get to marking out my lower highs and lower lows. Lower high, lower low, lower high, lower low, and then I rec cool. Now I've got my lower highs and lower lows marked out. I look and I jump onto the 1 minute time frame. So this is this is a 5 minute break of structure, by the way, guys. Yeah, guys. And one thing I've started to trade, I prefer 5 minute breaks of structures. And if I miss the move because I'm waiting for a 5 minute break of structure, is no problem. I'm usually happy with that. So it's no problem at all. Internally, guys, this would have been your internal break of structure. And some people like to trade internal break of structure. For me, I prefer the valid, nice structural shift. So this for me is a good change of character slash relevant break of structure. This for me, because it's a 5 minute break. So price action is showing with intent that look, I'm ready to reverse now. Or I'm ready to yeah, in this time reverse. So cool. Anyway, this build up we had in Asia, Frankfurt took it out, given another build up. So I just want to say Frankfurt gave, and guys, this can happen a lot, and sometimes I totally forgot about this, and I was getting induced by a lot. This build up got induced by this build up, and if you're on the 1 minute time frame, you're just gonna see this build up, and so you're gonna wait for an inducement high, and you're gonna try to sell from these zones. But you have to sometimes add context. In the 5 minute, this looks more powerful. It looks more like it's going down in an inducement fashion, in a vector candle fashion. We're having big drops, big drops, big drops. And on top of that, we have this medium inducement. So we're at least looking to fill in some of this imbalance before we can actually push up to complete the cycle. Because look, this was our build up, this was our inducement somewhere around here, and then we had our break of structure here. So now what we need on a higher time frame basis, higher time frame liquidity cycle, we need a mitigation. And guys, liquidity cycles happen not just on the 5 minute time frame. They happen on the 15-minute time frame, they happen on the hourly time frame. It's just we have to combine the higher time frame liquidity cycle with the lower time frame liquidity cycle, and then that's when we get a harmony, and that's when we start to find these great buys and great sells. And once we can get all of them together, that's when you're going to really start seeing success in your trading. So, guys, I just want to say again, look, I'm not perfect. I make mistakes too. We all do. I'm sure Saeed does. I'm sure all the other good traders you see on the chat does. Probably Ali does. Saeed probably makes mistakes as well. I make mistakes. We all make mistakes. So, guys, if you get it wrong, it's all right. It's cool. And something I've been having a problem with myself personally, I'm trying to be right more than I'm trying to follow my plan. And guys, don't get into that because you're gonna have a bad time. Don't try to say, all right, cool, this is gonna be a smart money trap, this is gonna be this is gonna be that. Guys, look, if you see your build up, you see your inducement, you see your change of character, and then now you can say to yourself, all right, cool, because if this is the inducement that's running the show, these should now be a smart money trap. Ideally, until we get to the next medium inducement. That's why I say medium inducement, trade away. This is a reminder to myself, and if you guys want to apply this, is no problem to trade away from this until you get to your next zone. And even if you don't, and even if this zone gets taken out, uh, that's why it's important to secure your partials. Secure your partials, and if that doesn't happen, it's no problem. At least you got paid. You was wrong, it's okay. You move on to the next trade. But anyway, cool. Let's move on now. So now that we've had our build up here, and I can see that cool, London traders are now waking up and they're seeing, oh my God, we are absolutely bearish. We're seeing lower highs, lower lows, lower highs, lower lows, lower highs and lower lows. And London traders are now waking up maybe 15 minutes, 10 minutes earlier, saying, all right, cool, we're looking for shorts. When in reality, what we know as liquidity traders and what we know as traders that understand how the market works fundamentally is by bringing in traps, bringing in sellers, and bringing in buyers to take them out later. We know that, all right, cool. We've now had an inducement low. After our inducement low, what's our second confluence that we're looking for? All right, cool. We've had a 5 minute inducement. All right, cool. Our second confluence for is that we're looking for a relevant break of structure. All right, cool. Now that we've had a relevant break of structure, we're looking for other confluences to strengthen up our bias that we're going now looking to get into bias. How do we do that? We say, all right, cool. Now we start to dig deep into the inducements. Are we inducing low and pushing up? Yes, we are. All right, cool, amazing. What do we have here? We have another build up right here. We have an inducement low. We have a push out. Right, cool. This one didn't break it, no problem. We go back here. We understand that, all right, cool. We have this sort of imbalances that still need to get filled. But if we fill in these imbalances, so let's say you didn't get into this trade, no problem, and you want to be extra safe. So all right, cool. If we have another inducement low, and then we break out, yeah. So we're saying this is going to be a smart money trap. So if we have another inducement low, we tap into this, we should expect a reaction. But now if we see that this reaction doesn't break past this low, and we go back here and induce this, we say to ourselves, all right, cool. Now I've confirmed that we're now bullish. This is our break of structure. We've had another break of structure right here. So if you wanted to be extra safe about it, your second break of structure would have been there, and you would have said, all right, cool. Now let's look into this zone to see that, all right, cool. Is this a zone that we can buy from? All right, cool. If we know that we're saying that this is going to be a smart money trap, and guys, I just want to say something, yeah? I wasn't awake for this, so this is the trade that I was awake for on EU, supposedly on the other side. I just want to say something, guys. Look, invalidation, valid, invalidation for sales. If we see, guys, yeah, that price taps into a local demand, I think it's called an inflection point, and we break structure from here, we know that. So, or if we price stops in here, if we, because price tapped into the supply zone, it could have broke this, but it didn't. What did price decide to do? Price decided to tap into this inflection point and then give a break of structure. So now that we're seeing, all right, cool, buyers are in control because we're tapping into demands and we're pushing up. So cool. Now the next thing you could have done is, after we've had this break of structure, this supply got turned into this demand zone. So now that we've had an inducement, because guys, at the end of the day, this is still an inducement because we've just induced smart money traders, people that just trade strictly smart money concept with just change of character, even though there was no real change of character here, in my opinion. Or maybe if you lot saw bias, I don't know. Maybe you lot could have said it's a change of character, but I don't know. I don't really see that what they see. You could have got into yourself into bias here. Why could you have got into bias here? Because now we've induced this smart money trap. This supply now turns into a demand. And then in this instance, because you don't need to wait for break and retest no more, because you already had your inducement. The only time you wait for break and retest is if you don't have an inducement and you straight away tap into a zone. That's the only time you wait for an inducement, is when you don't have one. So if you have an inducement already and our inducement was of this smart money trap, we can enter this zone with confidence, saying that we don't need to re-induce anything else anymore, because we've already had our inducement. We've had our what? This was our build up. This was our inducement. This was our break of structure, and this was our mitigation. So what do we have? This was our build up. This was our inducement. This right here, taking out these smart money sellers, all their liquidities here. This was our break of structure right here. And guys, not all inducement high leads to sells, and not all inducement lows lead to buys. You lot need to get that something in your mind, and it's something at the start I struggled with. And if you lot are just new to the concept, then it's something you lot are going to struggle with yourself. So anyway, this was our build up, this was our inducement, this was our relevant break of structure. So we've had our build up, we've had our inducement, we've had our relevant break of structure slash change of character. And now all we need to look for is a mitigation of a zone that looks valid. And this one looked beautiful. Why did it look beautiful? We had these three bullish candles giving us a perfect imbalance. So also on top of that, I just want to say, because I knew this was a smart money trap, this one right here, I said if price stops into here, this is where I'm going to take it from, because this smart money trap ideally shouldn't break past this long, because this is our inducement mitigation area. So, and guys, sometimes it might happen. We might have to re-induce stuff, but it's all right. It's no problem. You get into it anyway. You accept the loss and move on. So anyway, now that we've induced this, we've had induced that, we've had our break of structure, we've tapped into a smart money trap. So now I'm expecting a reaction. You can now position yourself and put your stop loss at the lows, covering the lows, making sure you cover the lows. Boom. And sometimes, if you lot just want to be a bit more safe, because sometimes it could just tap right here and go, be a bit more safe. Give it a little bit of room up, give it a little bit of room down. And if it's a 4 pips is a beautiful range to be in. So cool. Now that we've got our zone, we can aim in terms of for GU all the way to previous day high, giving you a 1 to 10. If you take partials at 1 to 3, this would have been a 6.5k day for you, and beautiful. This would have been your London session completed of 6.5k, just from understanding what's happening here, just from reading where you're seeing where your 5 minute build ups are. And guys, 5 minute build ups are the best build-ups to look for because they're a larger build-up rather than a 1 minute one. A 1 minute one will give you a minor reaction. It's just something you should use as an extra confluence to say, all right, cool. Where can I trade from? If you're trading a minor inducement, a minor liquidity cycle, you shouldn't really ideally look for large targets unless you have a larger build-up to back it. And in this case, we had a larger build-up to back this minor inducement. So that's why we can aim for our next medium inducement zone where price can possibly give a reaction form or reverse form. So this place right here would be a perfect zone to take your TP. And that's in terms of GU. I'm going to go into my EU trades in a bit. I'm just trying to break down GU for today. So cool. Guys, now that we've come to our medium inducement zone, we're coming to a timing called New York trap time. And why is this called New York trap time? It's because it's a trap and it's something that when New York traders are starting to look at the market, they're seeing we've been bullish, London's been bullish, so it will ideally either continue in the direction or depending on context, it might give a little reversal and then continue just to bring in New York traders to sell and then continue to take them out if he wants to continue bullish. So New York trap time could have went bearish, tapped into one of these local demands, and then for New York, we could have continued bullish. However, New York in this case gave us a reversal instead of a continuation. Because if New York trap time went bearish, New York traders would have been waking up and saying, oh my God, we're bearish. We had our reversal. We're ready to go, change of character. All these other break and retest traders, they would have started to try and get into sells. And then as price wants to continue bullish, in this case, it didn't. It would have just took them out and continued bullish. But cool. Anyway, let's go on to the New York sell that we had right here. So in terms of the New York sell, one second, guys. On here. Cool, guys. Yeah. Anyway, sorry, I tried to make a text. Cool, guys. Now that we're in New York trap time. All right, cool. Now we're saying to ourselves, guys. All right, cool. We've had our medium inducement, our second one of the day. It's in New York session. We're looking at it now, saying to ourselves, all right, cool. Like I said, are we ready for a reversal? And if we're ready for a reversal, lower time frame, like I said, we're going to go into the 1 minute, and the lower time frame is going to give us some sort of indication. So ideally, we're saying to ourselves, all right, cool. We've had our internal break of structure. So this one here would be your internal break of structure. I'm going to tell you why. So look, this would be our build up. This would be our inducement. And then this would be our internal break of structure. So guys, if you lot just wanted to be safe, and that's totally fine as well, you lot could have took this internal break of structure build up, medium inducement to the left, and you lot could have took this sell from right here. And if you're partial, so always give yourself a little bit of room. Let's say we're giving ourselves 3 pip, and we're just going to move this down where we cover at least the imbalance from at least 50% of the imbalance, as much as we can. If we go into the 2-minute time frame, it is a little bit, actually the 1 minute is a bit better of the imbalance, so cool. Let me zoom into this right here. So ideally we're looking to aim, if because it's 1, that's 2, and that's 3, ideally we're looking to aim at least 30 to 40% of the imbalance. Or if you want to be conservative, do 3.5 pips, reduce it down, at least cover the imbalance so you still get tagged into this trade. And 3.5 pips is a lovely stop loss. That is absolutely fine. And on top of that, you're giving yourself some breathing room. You're giving the trade some breathing room to get in as well. So cool. Ideally, just to be safe, if you're taking off internal breaks of structure, just in case, this would be a perfect place to take your partial at. Why this would be a perfect place to take your partial at? Is because, all right, cool. You're saying we've had our internal break of structure. We might be continuing bullish after this demand zone, but just to be safe, we will partial out here And still, even if you're wrong and price does continue bullish off this 5 minute, then you're nice to take this because you're saying to yourself, all right, cool. We've had our internal break of structure, we've had our minor inducement, we've had our previous day high, medium inducement as well. We've had our internal break of structure. We're saying to ourselves, all right, cool. Just in case price, just in case price comes to this demand zone and then continues bullish, we would still be securing 1.5%. But for me, what I like to see is I like to see a 5 minute break of structure. A 5 minute break of structure. So now I'm saying to myself, if I'm correct, I've got my medium inducement. I should be trading away from this. And guys, it's okay. But like price could have just tapped into here and then boom, shot up and created a new high. And I would have been wrong. But at the end of the day, I followed my plan. I had my confluences, my minor inducement, my medium inducement, my internal break of structure, my 5 minute break of structure. And if price went to continue higher, it's just a loss. I have to accept it. It's all right. We followed the plan. We're not going to be right all the time and we move on from it. But anyway, let's continue with that one. So for me, I had my 5 minute break of structure, which was here. So now I'm saying to myself, all right, cool. If this is my medium inducement and this is a true medium inducement and New York trap time has brought in buyers, this for me right now should be a smart money trap. So what am I expecting? I'm expecting a reaction from this smart money trap. All right, cool. I've got my reaction now. So what am I gonna be thinking to myself? And guys, by the way, I was analyzing this, but I didn't get to trade this as I was on the go on the train. So I had no service to take this entry. But cool. I'm saying to myself, all right, cool. This is a smart money trap. I'm saying to all right, cool. What do I want to see? I want to see ideally price not break this supply zone. Why do I want to see price not break this supply zone? Because look, there's no real imbalances to cover here. That's been mitigated. This has been mitigated. The only place left to be mitigated is this. So if price now goes and breaks this, first thing first, I'm gonna be taking a loss. Second thing, now sales are gonna be completely out my mind because all right, cool. In reality, price shouldn't have broken this, and because there's no place left to mitigate, price shouldn't have broken this. So now, this would be my invalidation for buyers. So if you was looking to buy from here, this should now be your invalidation. If you're looking to sell from here and that now you're seeing to yourself, this is my order block and price is not breaking it, it gives a reaction, smart money trap, boom, gives a reaction, fails to break the high. What does it do? It doesn't break the low. In fact, it mitigates it, fills that in. So some smart money traders, they're going to jump into buyers saying, oh my God, we've got a reaction. It's going to give another reaction, mitigate this. And in fact, it doesn't even break that again. So now you can even position yourself right here. But this has now been mitigated. You're saying, all right, cool, it's confirmed he hasn't broke that. Boom, he hasn't broke this high again. He hasn't broke that high again. It's even another reaction. Now you can position yourself here and look to short from here. And guys, just to be safe, 4 pips. If you want to be greedy, and sometimes, you know what, I'll catch myself being greedy as well. You could take that 3 pips right there, cover that, and ideally where your TP target should be, a sensible TP target would be, for me, Asia midline in this instance. And a sensible TP target. I wouldn't go for a breaking Asia low. Why would I not go for breaking Asia low? It's because now that this medium inducement, he has to induce something else before it can continue higher. So the next place that would best put here, either this low, but just to be safe, Asia low. Asia midline. And this would perfectly give you your 1 to 15 trade. So if you took partials, I'm gonna say this is about 3.2k. So this would have given you almost 10k if you took partials at 1 to 3 and you held all the way to Asia midline. This would have given you 10k. So just today, guys, you would have made yourself a lovely, what's 6.5k? Guys, someone do the maths for me because you know what, 6.5 plus 10k. Let's just give it on round numbers. 6.5 plus 10k, you would have made 16.5k today. 16.5k. Happy days. You've just absolutely smashed phase one, absolutely smoked. Or if you're on a live account and you're trading 1Ks, and I don't know, some people full port 1K, or even if whatever you're trading, let's say you're trading $100, you would have made 600. Well, I don't know the maths on it, but long story short, you would have made good money today if you just traded and just sat down and thought about what you were doing. So cool. Before I go into my trades on EU, I'm just gonna go onto the call and I want to see if there's any questions. I see one question from my brother DM. So why not Asia lows? I'm gonna go and I'm gonna tell you now. 1 second. Sorry, no, wait, 1 second, guys. I just want to go back. So we have one question. First things first, I'm gonna answer the brother's question here. And guys, any other questions that the brothers have, please turn on your mic. The sisters, I understand, but for the brothers, I'm just gonna take that one question from DM, and then the other questions, please turn on your mic. But before you lot do turn on your mic, um, if you before you lot do turn on your mic, please do give me a second to answer the brother's question. And why not Asia? Why not Asia low? Is because alright, cool. Well, if you're saying this is our medium inducement, our liquidity cycle, ideally we shouldn't be looking to break past this low. We should look to mitigate it. And if we do break past this low, in this sense, then then ideally we should be bearish. So because in my opinion now, we've had our pullback thing and we're still going to be a little bit more bearish. That's just my opinion in the higher time frame. So personally, a realistic point where you should take it from is ideally Asia midline for full TP. Why not Asia low is because first of all, it's getting later within the day, and second of all, on a higher time frame basis, I personally don't think it's looking to do for there. And in Forex, guys, let's be honest, this is not Nasdaq, this is not US 30, it's not New York Stock Exchange. Just take your 1 to 15 and be happy, and don't try overstretch it sometimes. So in terms of Forex, and one thing I asked my mentor about is like, don't overstretch your TPs in Forex pairs, because when you overstretch your TP in Forex pairs is and you make them unrealistic, it's not all the time. And guys, there will be some days where it will take Asia low. It's just your higher time frame and your analysis needs to align with it. So for me, I said to myself, right, cool, we filled in this imbalance. We've still got a little bit of imbalance here. Ideally, it should break past this. We should fill this in and then have a little bit of a retracement. But cool. That's the reason why not Asia low and Asia midline. That's just my reason. So cool. 1 second. No problem, my bro. So if there's any other question for the brothers, please do put your mic on and do ask. We do have a little bit of time. I'm gonna probably give it until about 9, and then 9 I'm gonna start heading out to my home. So cool.
Yo, bro, I got a question.
Let's, yeah, bro, go for it.
Yo, so would you take? I know the entry was before the 3 p.m. news. Would you get out before the news session, or would you take it with the news candle coming in?
Yeah, I'm a degenerate gambler. I'll hold it. You get me, bro? I'm gonna be so
Respect, I
genuinely honest
respect,
with you.
respect it.
I'm gonna be so honest with you, bro. I'm a gambler. I'm saying fuck it. Or sometimes, you know what? I'm just dopey. Like Forex Factory might just bug out, and I won't even realize there's news, and I'll just leave the trade running. But I'll be at break even, and obviously look, after the first structural shift. So after this one, so in this case here, if I did take this trade, I was on the thing, but I was analyzing as I went along. Um, if I did take this trade, if I took it from here, I would have been at break even right here. If I took it from here, I would have broke even here. But ideally for news, I would say if you want to be safe and risk it, go break even, or just after news, try get yourself an entry. And guys, because now that we've officially confirmed that we're bearish, I could sell here. Guys, look, this is order flow entry, yeah? And guys, this is when you get really advanced and you're on your personal account and you just want to rinse the move. I'll sell here. All All right, cool. What else? Where else would I say? Well, look, we had the mine inducement here. You wouldn't really see it as an inducement, but it did break the high. If you zoom it out enough, we had another inducement here. So you know what I'll do? I'll put my sell position right here because I'm already in profit from this trade. So I'm saying risk it. Why not 2.5 pips? I'd sell from here. All right, cool. Where's the next valid place to sell? You can then sell from sell. All right, cool. This sell would be a bit risky because actually, you know what? It wouldn't be risky because people would see actually. Thankfully, you reminded me, bro. People now, smart money traders, are now going to see this as a change of character. And I touched on this in one of the other sessions. And how did I know there was a demand zone to the left? I just absolutely knew it. You didn't even need to tell me. So they would have seen this demand zone and they would have said, all right, cool, that demand zone failed. This one's going to work. And then because I know this is going to be a smart money trap, if this is going to give me a false reaction, which it did give me a false reaction, in this case, I would have said, boom, that's going to be a smart money trap. So what they're going to see that? They're going to see that as a fake change of character. Boom, that's going to be your fake change of character. And then now this is going to be your internal smart money trap. And as you can see, guys, what did it do? And guys, smart money traps are everywhere. I promise you, they're everywhere. And guys, the market needs to do this. It needs to bring in people to to take out to continue its direction. So anyway, long story short, guys, you lot could have caught the sell from there. This would have been your original move. If you didn't catch that, no problem. You could have caught another sell from there. All right, this would have been your 1 to 13. That would have been your 1 to 10 and 1 to 23. And boom, happy days. And boom, 1 to 10, 1 to 12. Yeah, 1 to 26. Basically, just say it like that. And guys, the reason I'm saying have the confidence to do that sometimes is because if you're in profit in this trade and you've secured your partials, why not with some analysis here get yourself into another trade and make extra money and continue the downfall. And obviously, like I said, TP at sensible places. Don't aim for Asia low. Always keep your TP target the same. If you started from here and your target's Asia low, Asia midline, keep it there. If you started from here, your TP target's Asia midline, keep it there. Cool. Cool. That's hopefully the answer to the brother's question, that answer, bro. But guys, if you just want to trade nudes, be safe, go break even. If you want to gamble a little bit, then hold the trade. If you don't want to gamble, and personally, I don't condone gambling. But if you've taken 1.5% partial and you're happy to let the other risk roll and you're at a break even, you know what? I don't see no harm in I don't see no harm in holding a trade through news if you've already secured yourself some money and you're at break even. No problem, Sister Rama. And look after yourself. Um, I appreciate you tuning in. Um, cool. Cool. Also, guys, you know what? I just want to add another thing about news, yeah, guys. And something I've realized about news is, and this is not in all cases, but in some cases, news kind of follows the market in terms of cycles. So if you have your correct directional bias for the market in terms of liquidity and everything like that, it more time just mitigates something and then just push it and induces something and pushes where it wants to go. So that's just what I've realized from the market. And in this case, I wouldn't have realized the news was here and I was on the train anyway. But cool. Let's move on. So is there any other questions? Full port Jaws and the brother, I just want to say keep it a little bit PG, please, bro. I'd appreciate it. There's a time and place to have a little mess around, but I just want to say let's keep the chat a bit open to questions. Cool. Anyway, guys, there any other questions? If there's a chance you want to ask now, ask because in next like 5 minutes, I'm probably gonna stop the questions and go for an EU breakdown. Um, any questions by anyone? If anyone got any guys? If you're a guy, turn your mic on. No problem. If you're not a guy, then you make it. Like thank you, but I appreciate it. I wish every day was as easy as today. Today was just the absolute beauty of a day. And guys, this is the same things that I'm telling you I do on my back testing. Like, it's literally the same things. The same things that I do on my back testing, I literally do on here. Like, it's just on the live markets, there's a bit like there's emotions involved and confidence and other factors that are involved in the live markets. Of course, it's a little bit more difficult than back testing, but in the back testing, I do the same things. I say to myself, all right, cool. You have to always question your trade ideas. So, all right, cool. Is this really an inducement, or is this really this, or is just a break of structure and stuff like that? So before you jump into a trade, and guys, one thing I want to say to you is if you're not sure about a trade, don't take it. If you say to us, if you look on the trade and you have your stop loss ready and you're about to click buy or sell an MT5, and then you have a second thought in your head that says, I'm not sure about this trade. Even if you're right, just don't take the trade. Only take trades that you're sure about. And if you're sure about that trade and you take a loss, if you followed your plan, you've took the loss and moved on. So it's okay. Like there will be days like this where you catch basically everything. Like I caught the buyers. I was busy for the sales. If I stayed at home, I definitely would have caught these sales as well. That is a guarantee. Because I was talking to Saeed about it earlier, and for EU, I didn't know which one was going to reach previous day high. And I guess in this instance, GU was the one that took previous day high. So for my EU buyers, I would have closed out when it come to New York time because I was said, all right, cool. EU's not going to come for these highs, and GU probably is. But cool. Like I said, let me go on the chat. Um, if your trade is at 1 to 3, what gives you confidence a trade has potential? Well, bro, to be honest, you know what? If you're at 1 to 3 and you've secured 1.5%, next thing you need to do is literally just put your stop loss to break even and let the market do its thing. And today I did that a lot, and something I'm proud of myself as well that I'm working on. Put my stop loss at break even, and I just let the trade run. And just don't look at your profit and loss. Don't look at the numbers, because I'm going to tell you something about EU today. EU today for the buyers absolutely messed me around. How many guys? In fact, EU tickled my stop loss. I promise you. I sent this to my friend on Discord. EU tickled my stop loss. It was literally inches away. And if I panic closed this trade saying, "Oh, I don't want to hit break even," I would have missed it. And in fact, I could have went for 1 to 7, but I went for a conservative 1 to 5, 1 to 4, 4.5. I just said, all right, cool. I just want to see this equal highs get taken, and I let it run full volume. I was at break even, so that's for that. So 1 second, if that's the last question, I'm gonna continue, and I'm going on to. I have a quick question, bro. I got a little confused. Can you explain inflection zones? So inflection zones is this: we have a supply zone, we have a demand zone. If how to confirm this is a smart money trap is this is another confirmation for you as well. If you guys are not sure how to confirm smart money traps, if this supply zone taps in to, in this instance, let me go into EU. If this supply zone fails to break this demand and taps into this demand zone, and in this instance it tapped into there, this now is confirmed for you to be a smart money trap. And all right, cool. That's why I say if you're taking internal breaks of structure, if you're taking internal breaks of structure, you need to be careful about where your demand zone is because it doesn't make sense. Look, you could have seen this as a supply zone, minor inducement, boom, internal break of structure. But if this internal break of structure, in this instance, this one doesn't give you, I'm on the computer. Give me a second, please. If this, I'm on the computer. Yeah, go on. Give me a second, guys. 1 second. Yeah, cool, guys. So just to go back onto the inflection point. So if this inflection point you're taking from here, and ideally, guys, this is not something. Let's say you took this. Let's say you took this one first here, internal break of structure. Like this imbalances and this demand zone is too close. But if this demand zone, this one right here, was a little bit down here, and you had internal break of structure from here, and this was your, let's say this demand zone doesn't exist, and this was the demand zone you're aiming for, I would have said, all right, cool. Maybe you can take this short-term sell into this demand zone because it makes sense for your 1 to 3, so you could pass you out here. And even if you're wrong, you've secured some money. But if the 1 to 3 doesn't make sense for a zone, then ideally you should stay away from it. That's just basically one inflection. But to go back to what I was saying, an inflection point is basically when the supply zone, you have a higher time frame supply zone, you're looking for sales, but it taps into a local demand and doesn't break it. But if you broke past this demand and then tapped into here, maybe I'll give some validity to this sell and say, all right, cool, I might be looking to get into sales, but I wouldn't, because first of all, we're inducing low, and then on top of that, I'm trading away from this medium inducement right here. This medium inducement right here. And guys, I just want to say something for the people that were early in thing as well. Guys, if we take away our Asia zone, what basically trading from medium inducement to medium inducement is basically what we're trading from. So look, medium inducement here. All right, cool. Break of relevant break of structure. Cause look, this is your 5-minute high that caused the low. Boom. You put that's your relevant break of structure. That's it. And how do we confirm an inducement? With a break of structure. That's just one of the ways, but obviously there has to be other confidences that make sense. And some thing, you would put your buy position right here, and then you would buy it until in this instance for EU it would mitigate until probably right here. Boom. But when we do apply Asia zone is when we get to see, all right, cool. This is now what we're looking at. So cool. Also, another thing, let's just get onto the EU breakdown real quick. Inflections is when you might no man's land. All right, cool. I think that is gonna explain that a
Ada.
little bit.
Yo, Ada.
Um,
Yo, Ada.
all right, cool. Yeah, basically, what you guys are correct as well in your own term. It's riskier. Just if you see an inflection point that's close, I'd personally stay away from it. If you see an inflection point that makes sense for your 1 to 3 partial, then you can take it and partial out quick and break even quick. But cool. Anyway, let's go on to EU now, and let's break down EU. So cool. We have this medium inducement. Beautiful. Right here we have this medium inducement. All right, cool. This medium inducement has given us a relevant break of structure, which is one I've just showed. And cool. So guys, always look to the left, yeah? The left will explain, I'll help you out to decipher today. So cool. Also, on top of that medium inducement, we're now having this 5-minute build up, which is absolutely amazing. 5-minute build up. Cool. Now that we're seeing Frankfurt, I can see that, all right, cool. Now we've induced all of this, and on top of that, we've come to this here, and we've taken out early buyers. Why are these early buyers? Because these built a whole load of equal lows. And let me just extend out a little bit so we see here. So we had our medium inducement here. Medium inducement. We've had our relevant break of structure. And guys, majority of this is now becoming liquidity, because now we're building a trend line. So all right, cool. Now that we've had our inducement low out of this trend line, on top of that inducement low, that 5-minute structure, we've now had, look, another inducement low, had another inducement low. And guys, this is why timing is important. Because if you took this at 7, it was going to get induced. Because the big moves happen for the big sessions. London session, New York session. So ideally, you lot should look for the moves that happen in London and New York, which we all kind of know in here, I'm pretty sure. So look, we've had our build up, we've had our inducement low here. Boom, good to go in that sense. And then we've had our 5-minute build up, we've had our medium inducement, we've had a break of structure there, change of character. In fact, we've broken structure a lot here. And then now we're looking to ourselves, saying to us, all right, cool. If we've had this build up right here, we've had this medium inducement low, we've had this break of structure here internally, we haven't broken past this low. Now, ideally, after this liquidity gets taken out, we should look to enter ourselves in a position. So cool. Now let's go onto the 1-minute time frame, and let's jump onto here, and let's go down a little bit. So cool. Now, all right, cool. Now I'm saying to myself, that's my medium inducement to the left, and in my mind, we're bullish. I'm gonna be saying to myself, all right, cool. This, and I think the brother Saeed got got entered here. I'm not sure, but I didn't enter this entry. I was on the move, but I did get into here, and I did get into a continuation here. And I'll tell you about this trade, and I'll tell you about this trade. So cool. If I know that, all right, cool. Remember the supply to demand thing I was talking about? This supply zone was an inducement supply zone. Why was it an inducement supply zone? Because it induced this smart money traders here. So this was our build up here. The smart money trap was our build up. Smart money trap was our build up. This was our inducement. We had our relevant break of structure for that inducement here. So now our liquidity cycle is done. We've had our build up, we've had our inducement, we've now had our relevant break of structure, which also mitigated this. So if you lot missed this, that's no problem at all. But this could have been how many entries? Let's just count the entries for the sake of it. You lot could have took this entry right here. In fact, if it's not that entry, you lot could have took this entry right here. This one would have probably been a bit larger, but let's just put that 4 pips there, because what do we have? We had our build up, we had the inducement low, we had our break of structure, so our break of structure would have been here, and this would have been our mitigation zone. What do you wait for as well? And guys, look, this is what I'm saying. Sometimes break and retest can get induced, and sometimes break and retest doesn't need to get induced. But just to be sure, cover the low and make sure that you try to get as much of the zone as possible, if it makes sense for your stop loss. So look, in this instance, we had break, retest, they got induced here. We also had this minor inducement, so clearly there wasn't enough liquidity in this inducement for this push. But cool. Let's say that was your first entry. Let's just leave this like this and we'll check the risk to reward after. So let's say this was your smart money trap entry. This is now you're saying this has failed. This was your build up, your inducement. I mean, this was your build up, this was your inducement. Now this supply turns into a demand candle because this is now becoming a smart money trap as well, because we had the fake change of character here. And guys, look, price changes character all the time. Like it changes character here, change character here, change character here, but it's all about your liquidity and your context behind what change of characters and what breaks or structures are relevant to you and which ones are not relevant and which ones should you avoid because they are traps for you to get caught in. But cool. Anyway, so now that we have induced this, and we have in this was our build up, this was our inducement, supply gets turned into demand because they tapped into there, turned into a demand. This is also another inducement. Now we could say, all right, cool, this should be ideally our mitigation zone. All right, cool, this is our mitigation zone, so you would be valid to take the trade from here. And what did I do? I entered as soon as it tapped in. I put my high at conservative TP target, which was just the high of these equal highs. So this is a very conservative TP target, but I took it at full volume. So because I took it at full volume, I took no partials, so I made 4K from this one, 4.5K. So because I said, all right, cool, where's my next liquidity area that I can target? These equal highs here, I'm looking for price to break here. And guys, look what price action did to me for an hour, and then another hour, and then finally at 12, after I entered that an hour and a half before, it finally gave me my TP target. And guys, this is something I was very proud of because I don't know if my brother Tim's in the chat, but he said to me, bro, just don't look at your PNL. He said, just look at the chart and just relax. And guys, what I didn't even look at my phone. I might have given it a glance, I'm not gonna lie to you, but I just closed it after and said it doesn't matter. You need to detach the emotion away from a trade sometime, and that's something I've been working on. So today I'm proud of myself in terms of that sense. I detached the emotion away from a trade. And boom. So we took this trade anyway. My break even was here. My break even got hit. Beautiful. I said to myself, all right, cool. There is a chance this price comes in, fills this imbalance, which it did. And then it gave me my TP. So cool. That was my first trade. That was my first trade for the day. And then I was at the gym, and then I said to myself, all right, cool. We're coming close to New York trap time. We still haven't had our medium inducement yet. So ideally, we should really be trading away still from this Asia midline trade and the medium inducement before. So now I went on to the 1 minute time frame and I said to myself, and might have been a stroke of luck, but I said, raw, okay, we've had this break of structure right here. We've had this break of structure right here, but then We've tapped into this local demand, and then break and retest has got taken out. And also, it's an invalidation point for these cells. So I said to myself, this now is going to turn into a smart money trap because we've now reached an inflection point. And the inflection point is this demand zone right here. Because look, guys, if you're following basic market structure, higher low, higher high, higher low, and what did price go and do? It created a new higher high. So this was the inflection point. I said to myself, all right, cool. We've not invalidated the point for sales. We haven't even reached back, or there was no internal pull back into here and then come into here. There's no medium inducements. So this supply zone is looking weak to me. Also, on top of that, I just want to say it's this supply zone, which actually, no, it wasn't. We've had an inducement of Asia high. So I know that inducement of Asia high is going to give me a reaction. But that reaction is short-lived in this instance. And that reaction tapped into this point right here. So, all right, cool. Now I said to myself, I'm thinking, all right, cool. Break and retest has got taken out. So we've had our build up, we've had our inducement. We also have a smart money trap as a target that we can aim for. And I had now that break and retest got taken out. I said, all right, cool. There's no reason any longer for price to come and break this low unless I am just simply wrong and price wants to continue bearish and it just taps into the supply zone and moves off. So cool. Anyway, what happened? As you can see, guys, price tapped into this and it came very close to my stop loss. I'm not gonna lie to you guys. My stop loss was right here. I'm not even gonna lie, maybe even deeper. It was absolutely close to my stop loss. And in reality, after that, I said to myself, yo, be a bit conservative for your next trade. And thankfully, I didn't get no slippage, no nothing, and it kept me in the trade. And then I hit this trade for a full volume to break the high for well, just a little bit above the high for 3.9 R, full volume, no partials, and I closed that like that. So cool. That was for EU, and we've done GU, guys. So now I'm gonna give it another like 10 minutes, 10 past 9. If there's any other questions that I would like to see. I'm gonna scroll through the chat a little bit, but cool. If there's any questions, you lot are more than welcome to put your questions now. I'm gonna give it approximately till 5 past 9. No questions by then I'm gonna end the call. Guys, I do this for free. It's just out of love, and all I wish for is that you guys just give good prayers and wish the best for everybody else. Guys, don't forget, like, success is something we should wish upon everything else. And when we wish goodness upon everything else, just believe that goodness will also come back to you, guys. So when you help someone, if you guys believe in God, God will help you back in ways that you can't see and you won't ever know. And I know this by even if it's just maybe in just helping answering questions here, or just being friendly to someone on the street, or just helping an elderly person pick up their bags and take it there, or even just it might be a polite smile to someone that looks a bit sad. That might just change their whole day and brighten up their day. So guys, just kindness is not just about giving things, it's also about just the way you conduct yourself and how you are as an individual. And guys, look, we're not all perfect, we all have our grumpy days. That's what I'm saying. For the days that were grumpy and for the days that were sad, we hope that someone cracks a smile at us or asks us about our day or says, cheer up. And God returns these little things, and then that might be a whole shift in the momentum of how your day's going. But cool, anyway, that's enough of me rambling about being a good person. Let me just answer these two questions. If anyone wants to stay for the questions, you lot are more than welcome to. If you don't want to leave, is all right as well. So cool. First questions first. Thank you. I appreciate it, guys. Allah. Thank you. I wish the best to all as well. So cool. You said you said trade medium inducement to medium inducement. What about internal? Where's when there's no medium inducement? So you can trade internal inducements as well, but preferably, and to be honest, guys, there will be a medium inducement somewhere. It will either be in the instance where, in this instance, it was here from previous day, or for example, let me try find an example when there is no medium inducement. But guys, there is always a medium or major like medium or major inducement. Like I went through this as before. Like, all right, cool. All right, cool. In this instance, what happened? Asia gave you a medium inducement. And guys, if there's no medium inducements, what you need to ask yourself is am I going to complete a higher time frame liquidity cycle? Like for example, this one here, this was your in this instance, just to answer the brother's question for a quick, this was your let's say if I go into the hourly, that was your major inducement because it's an hourly low. All right, cool. Now you go into the 15-minute time frame and you say to us, all right, cool. Now I need to complete this liquidity cycle. So if I need to complete this liquidity cycle, I need to ideally, if we're saying this is the low, this needs to get mitigated. I ideally need to be selling into here. All right, cool. So how would you sell into here? All right, cool. Now you'd go into the what day is this? It's a Wednesday. So cool. Let's go into Wednesday 15th. Yeah. Um, Wednesday 15th. Where was that? Right here. So cool. Now you'd go onto your thing and say to us, all right, cool. And guys, you can be wrong as well. Like, it's all right. So look, that's why I asked myself, is this an inducement or a break of structure? But if this is an inducement or break of structure, ideally we should mitigate this and we should go up. So all right, cool. Now, well, like I said, you can follow if you're confused, follow the lower time frame. So all right, cool. So we've had our London session. London session's tapped into here. It didn't give you no trade. We've had this little bit right here, this build up. We've had this inducement high. We've had a little bit of a let me see. We've had a little bit of a medium inducement. Let me get rid of that. In fact, no, we've built equal highs. All right, cool. No problem. No, actually, you know what? We induced it by the slightest amount. But did they give us a trade? All right, cool. New York trap time gave us a trade. We had this build up inducement high. And then probably somewhere here was your entry. So guys, look, if you can't identify a medium, bro, I don't know what K2 KTW is. I don't trade the way Wakar trades. But just to answer the brother K's question, you said you trade. What about internal? If there's no medium inducements, then I follow the liquidity cycle. If I see a build up, inducement, mitigation, I will take that trade. I might be wrong. It's no problem. But just medium inducements helps me get a direction of where the market is going and where the next medium inducement might be. So if there's no medium inducement, you can't identify it, trade the internal liquidity cycle. But if you're gonna trade the internal liquidity cycle, go for quick one. Make sure you break even quick, and make sure you take your 1 to 3 partial quick. That's what I'm gonna say to that one. So why do you call medium inducement that happened outside of KT? If you can just reply what KTW is. Um, okay, 1 second. You consider time as a confluence. For example, we have a medium. You know what? I do consider time as a confluence. It is a confluence. Key time window, London. All right, cool. So, all right, cool. The medium inducement happened in the key time window. But guys, look, what did I tell you again? I just want to say something. All right, cool. It might have happened. Key medium inducements that happen in key time windows are great. But guys, not all medium inducements need to happen in key time windows. Let's just. I just want to say, like, prices. All right, cool. Let's just take away Asia zone. What are we doing? We're trading away from this medium inducement. All right, cool. Where are we trading away for? All right, cool. In this instance, we had this medium inducement. This is with no Asia zone, yeah? We're trading no Asia zone. We've had our medium inducement. All right, cool. I'm going to trade away from this. Where am I going to trade away from this? I'm going to trade away from this until here. What do I see this as? Build up, inducement low, relevant break of structure, another internal inducement. Boom, I'm going to buy from here. All right, cool. I've seen this medium inducement here. Boom, I'm going to take this higher, relevant break of structure, mitigation here. I'm going to sell. Cool. Let's find other examples with no Asia zone. All right, cool. Let's find. In fact, let's go into here. All right, cool. Let's see. Cool. So, what am I gonna have here? I'm gonna have cool, cool, cool. Let's find it right here. Do I see any examples? And guys, look, this is what I'm saying. Let me go into 15-minute structure actually, so I can find it. So cool. Look, boom. All right, cool. This is just examples that I'm giving it. Cool. So look, I'm gonna see this medium inducement. All right, cool. What am I gonna have? Internal medium inducement, another build up, inducement into mitigation. I'm gonna trade this buy. Cool. Now, if I go on to the next day, this is next day, this is previous day liquidity, this is next day. Cool. I'm gonna say, all right, cool. Now we've entered the next day. This is previous day liquidity. We've had our medium inducement here. What do we have right here? A relevant break of structure. Boom, right here. What am I gonna do? I'm gonna take my buy from here. When did this buy happen? London. So guys, just to answer the thing, timing is important, but mm, timing doesn't always matter in terms of in terms of catching your direction. But timing is very important confidence. Like for example, this trade, because it's in my time window, I'm gonna be worried about the timing. But this trade in the morning, I had my medium inducement. I'm gonna say, all right, cool. If I have another minor inducement and it actually shows me that we're trading away from this inducement here, I will look to buy. But yes, to answer everyone's question, key time window medium inducements are important, but out of key time window medium inducements can give you a direction for what you want to be doing for before you get into your key time window like London. And that's just how I see it, guys. Because if we take away our Asia zone, we're literally trading what we see, and this is just for you to decide. All right, cool. Are you getting your relevant breaks or structures? Are you getting your inducements? All right, cool. What do we have here? We had what? A medium inducement here. We had a minor inducement of the low. We had a relevant break of structure right here. And guys, this is not in my key time window. Look at this. This is not in my key time window. This is at 9. This is at 9, at what, 8 o'clock London time. Relevant break of structure. I had my medium inducement. 1 second. I had my medium inducement right here. I had my minor inducement of the low. After that low got taken out, what happened? I've had my relevant break of structure. What happened after that relevant break of structure? I got into here. I bought from here. Let's just say this is just like thing. I would have bought from here. Where would I have bought to? All right, cool. I would have bought to at least this supply zone. All right, cool. In this instance, let's say we would have got partial doubt, would have hit break even. This is probably news. Looks exactly like news. Yep, Friday. This is probably what's the Friday news called? Anyway, regardless of the thing, you understand what I mean, guys, yeah? So at the end of the day, key time windows are important, but the market moves when you're sleeping. The market moves when you're awake. The market moves. As long as it's moving and there's correct confluences, you can trade it. So cool. How do you confirm a medium inducement? Like I said, you confirm a medium inducement by a relevant break of structure and a minor inducement extra to be extra confirmation. A relevant break of structure is a change of character. I just call it a relevant break of structure because that's how I've been taught. Or newly taught, actually, not too long ago. So cool, guys. You know what? It's 10 past. I've answered a bit more questions than I should have answered, and I hope you guys learnt something from it. I'm gonna leave you guys to it, guys. I hope you lot enjoyed the call. I did pre-plan it for the people that wanted to be here for the pre-plan. So I just want to say, Wix will cut. Yep. To answer the question. So guys, I leave you lot to it. I hope you lot have a